Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, January 11th, 2023. It's now the 10th. We start off in the S&P 500 daily chart and DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 has printed the combo and sequential sell setup 3 count. And to negate that for end of day on the 11th, there must be a close below 3808.10 for the price flip to the buy setup count 1. And the 50% propulsion momentum up was qualified at end of day today on the 10th. It had a close above 3916.84. The close was 3919.25. So to get the confirmation bar by end of day on the 11th, there must be an open higher than this close from the 10th, tick higher than this high on the 9th, and close above this close on the 10th for end of day on the 11th, and it will be qualified and confirmed, making the 50% propulsion exhaustion up qualified and confirmed also. And the process for getting the 50% qualified and confirmed would require getting above the Ichimoku daily baseline at that level and closing above that baseline at 3932.73 will definitely be a trend change to the upside, as the weekly chart, the conversion line, which is above the baseline, so the conversion line is at 3932.73 also, and the 39 period moving average for the weekly chart is nearby at 3941.80. So get above those levels and close above this, and that will be definitely a trend changer to the upside. And S&P price heads south instead and gets a close under this close for end of day on the 11th, and this trend factor down 1 will become qualified and keep going, and the trend factor down 2 will become qualified with a close below that. It would have to get under the conversion line here and keep going and get under the ongoing demand line, and that could become qualified also. And then a little bit further, and the 50% momentum down for propulsion would become qualified. It's currently disqualified now at this level. And the odds, in my opinion, are in the favor of qualifying and confirming this level here, this 50% momentum up, rather than all these other levels that I just mentioned, as Powell did not slam the rally when he was at the Bankers Symposium in Sweden. So he talked and answered questions and did not even mention the rally or anything. So it took a while for traders and investors to catch on. It's been thin volumes, so it did catch on, and there was some nice up move for today. And we all know the Fed is at odds with the market and is on the verge of killing the economy and sending it into a recession. And you can take a look at the 3-month U.S. Treasury yield, 4.73, and the 10-year U.S. Treasury yield, 3.61. And you do the math and subtract the two, and you get 113 base points inversion of those two yields. And you can see in the thumbnail, the 3-month in dotted purple, 4.73 is just 1 basis point away from overtaking the 1-year Treasury yield at 4.74 over here. So to have that 3-month commercial paper breaking out to new records and growth as shown by the NYA to SPX ratio, basically value versus growth, and growth on the verge of becoming completely trounced to the upside if this ratio gets above 4 and starts moving up, as we've seen in the 60-year NYA to SPX ratio chart. And you can see the video on the 3rd for that 60-year NYA to SPX ratio. So he's going to have to do something, and the best thing that he can do is do nothing. And what I mean by that is when the time comes for the interest rate hike, make it a 25 basis point hike and then pause right there. And the odds are very high that the CPI report that's coming up should be pretty good, and he's just going to have to let the market have their will because he's just gone too far. And actually, looking back at the daily chart for the bar for today, when he did not say anything against traders and investors running things up and just kind of not mention that, I thought that traders and investors were very cautious and conservative by bringing it up this far. Yeah, it went above the 50% momentum up, but not many know that anyway, so that was not a huge bar for today. So I think they are being cautious and that he can back off and let the market freewheel and see where it goes. My opinion, I don't think that's going to happen, but you never know. The S&P 500 downtrend line chart, I'll zoom into the current area now. And the first candle in the series of 3 higher closes required to start covering shorts and buying longs has printed here. And ideally, it will look like the 3 white soldiers candle pattern here in the picture will print. And that's from Thomas Bulkowski in his Encyclopedia of Candlestick Charts. And you can read about some of it here. I'll scroll up. And ideally, it's just a little bit of a down open at the open and then a higher close, and do that for the next 2 bars. And we'll get the 3 white soldiers. However, if there are gaps up on the open at any one of these, that's okay as long as we get 3 higher closes. The S&P 500 support and resistance levels big board chart shows the gray areas at 39.15 monthly support and resistance. The daily baseline R1 in the weekly conversion line, and price in the aftermarket hours for the S&P 500 on the 10th at 6:17 p.m. Central Time is 39.25. So to the downside is the 50 moving average, the weekly baseline, the pivot point, Fortress Fed resistance, and the weekly diamond bottom extension perfect uptrend channel. And to the upside is the weekly Bollinger Band 39.41, R2 at 39.48, and the top of the cloud 39.59. And I gave a target of this top gap zone 2 at 3967.79 for possible reversal. And the NASDAQ 100 is now above its 21 EMA signal line by 4 or 5 points there. And the S&P 500 daily AD line is still well above its 21 EMA signal line. And the New York traditional McClellan breath oscillator to get back to zero would require 3,771 decliners over advancers to get back to zero. So watch this level here, the weekly conversion line, 39.33, and the daily baseline, 39.33. They're both the same, so let's get closes above those levels, and I think we'll be on to something. Have a great day.